Welcome back to the Daily Stack. Today, it's August 14th, 2025. This is not financial advice, unless your retirement plan involves leverage, memes, and yelling "wag me" into the void. Today's episode is one of those wild, everything happens all at once kind of days. Bitcoin made headlines with a fresh all-time high, Ethereum is heating up, ETF flows are exploding, Circle just launched a new piece of infrastructure, Bullish IPO'd and doubled, Google Play made a long overdue change for wallets, and then, right as everyone was riding high, PPI numbers dropped. And so did crypto. Let's get into it.
I ride slow through the digital night, stacking these coins like bricks in the light. The block's hot, but it's cold on the chain. Cold never lies, but people play games.
Yesterday, Bitcoin did the thing. It punched through $124,000 with force, breaking past previous all-time highs, flipping Google and market cap. Yeah, that Google. The one that powers half of the internet and knows all your secrets? For a few glorious hours, Bitcoin was the apex predator of capital markets. Price action was clean, momentum was strong, and bulls were grinning like they just solved the halving cycle. Every chart looked like a launch pad. Social feeds were full of new paradigm tweets, and institutions kept piling in like they just discovered crypto last week. But then, the dump, triggered by hot PPI data. This morning, the party stopped cold. The producer price index, that's inflation at wholesale level, came in scorching hot. Expectations were a modest 0.2% month-over-month increase. We got 0.9% instead. That's more than 4 times the forecast. It's the largest jump since June 2022. On a year-over-year basis, PPI came in at 3.3%. Also, way higher than expected. The moment that data hit the wires, crypto tanked. Bitcoin, Ethereum, altcoins across the board saw sharp, sudden drops. It wasn't subtle, it wasn't slow. The reason was obvious. Inflationary pressure on this magnitude suggests Federal Reserve will stay aggressive longer, possibly delaying or even derailing interest rate cuts. Risk assets, especially volatile ones like crypto, they don't like that one bit. And now, the market's in recovery mode. Ethereum's ETF, despite the macro headwinds, Ethereum is still holding strong structurally. The big story? ETF inflows. Massive ones. Yesterday, 729 million flowed into Ethereum ETFs. That's institutional validation. The kind that brings long-term capital, not just short-term speculation. Analyst price predict starting to float towards 7,500. While that number might have sounded crazy for a few months ago, now it's being backed by actual flows and growing utility. Ethereum is being seen as more and more of financial infrastructure. It's not just for smart contracts, but for global capital. Combine that with strong staking, expanding Layer 2 adoption, and upcoming regulatory clarity on stablecoins, you've got a setup for something real serious. Ethereum's still in the game. Macro may be slowing it down, but the direction, it's pretty obvious. It's in one direction. While price action grabbed headlines, another major milestone slid under the radar. Bullish, the crypto exchange, went public. Ticker symbol BLSH. And it didn't just trade, it doubled on debut. That kind of move on day one is rare. It signals massive demand, excitement, and appetite for exposure to crypto infrastructure from traditional markets. Interestingly enough, Coinbase also pumped on the same day. So no, this wasn't a one versus the others scenario. This is a wave. Bullish, Coinbase, ETFs, everything crypto adjacent is getting love right now. That IPO told us one thing loud and clear. Institutions want in. Circle, behind USDC, just launched something big called ARK. This is their new infrastructure layer on real-world asset tokenization. Think treasuries, stocks, invoices, all going on-chain, all denominated in USDC. It's part of a bigger play to make USDC the backbone of the tokenized financial system. With the Stablecoin Act gaining momentum in Congress and BlackRock-style ETFs driving demand for tokenized yield products, ARK is arriving exactly at the right time. Circle isn't just aiming to support DeFi, they're targeting traditional finance stack from the bottom up. Google Play finally supports non-custodial wallets. That's a big move on the mobile front. Google Play updated their policy to officially allow non-custodial crypto wallets on the platform without restrictions. No more weird app store gymnastics, no more half-banned wallets, no more hoping your app doesn't get delisted because it lets people hold their own keys. This means smoother onboarding, better user experience, and a huge unlock for mobile-first Web3 developers. Expect to see a flood of new wallet apps, Solana Pay integration, Arbitrum-based dApps, and smoother DeFi tools rolling out for Android in the coming weeks. This was long overdue, and it's a big win for adoption. Let's do a recap on the PPI.
I think that the arguments and elements for a rally to continue are in place, because even today, with the hot PPI print, the stock market is basically flat. So we had a down open. I think investors bought that dip. Part of it is I don't think that the PPI is sending a message that inflation's soaring. There are some things to sort of cut out of that number.
Sure.
Let's zoom out and recap the macro backdrop that triggered today's volatility. PPI came in at 0.9% month over month, expected 0.2%. PPI year over year, 3.3%, and we were expecting 2.5%.
You know, as we think about the rest of this year and next year, I think that the thing that's the worst case for investors is Fed hiking. If the Fed does nothing between now and year end, I think some would actually argue that's half full because the economy can handle these higher rates. But if the Fed does 25 or 50 between now and year end, really to normalize real interest rates, that's actually positive for stocks.
The inflation spike was driven by higher prices across service goods, especially in the wholesale costs for food, machinery, equipment, freight transport, and financial services.
The economy doesn't seem to be suffering under the weight of these current interest rates, even though the Fed is much higher than the rest of the world. And the second part of that is, of course, that if the Fed does 25, it's still a dovish move.
Markets immediately priced and reduced odds of near-term rate cuts from the Federal Reserve. This is important because crypto has been running hot off the assumption that rates would start to come down soon. That assumption just took a hit. So where do things stand now? And what do? Bitcoin ripped to new highs. Ethereum's looking strong, backed by real ETF flows. Bullish IPO'd and proved that public markets still love crypto. Circle launched ARK and doubled down on tokenization. Google Play finally did the right thing for wallets. And this morning, crypto took a punch to the gut from the PPI report. The market is still recovering from that hit. It's a mixed bag. Structurally bullish, temporarily shaken. And the next few days could set the tone for going into late August. And that brings us to the tip of the day. Use macro catalysts as timing signals, not directional bias. Just because you're bullish on crypto doesn't mean you can ignore data like the PPI. These events don't change the trend, but they do change when moves happen. So if you're stacking long term, cool. Zoom out and stay focused. But if you're trading short term, these reports aren't noise. They're the volume knob on volatility. Don't just watch the charts, know what's behind the candles. Only ever click the official hardware link in the episode description. Skip Discord promos, Twitter DMs, or meme giveaway hypes. Your keys remain sacred. Stack smart, stack daily. I'll see you DGens tomorrow.
Hustle in the wallet, numbers don't sleep. Keys in my hand, I'm the wolf to the sheep. Scammers in the shadows, fishing for the weak, but I see them coming. Yeah, I'm way too deep. Stack them coins. Block by block, I'm building my joint.